legit. Anything you want.
The global economic reset begins with an engineered crash. The globalists are ready to start the global economic reset, and they have their populist scapegoats in place, such as Trump. Here are the details. By Brandon Smith via Altmarket. For a few years now, since at least 2014, the phrase global economic reset has been circulating in the financial world. This phrase is used primarily by globalist institutions like the International Monetary Fund, IMF, to describe an event in which the current system as we know it will either die out or evolve into a new system where multilateralism will become the norm. The reset is often described in an ambiguous way. IMF banking elites will usually mention the end results of the shift, but they say little about the process to get there. What we do know is that the intent of the globalists is to use this reset to create a more centralized monetary system and micromanaged global economy. At the core of this new structure would be the IMF along with perhaps the BIS and World Bank. It is a plan that has been supported openly by both Western and Eastern governments, including Russia and China. As noted, the details are few and far between, but the IMF describes the use of open borders and human migrations during the reset as a means to transfer capital from various parts of the world. It is a novel if not utterly insane way to transfer wealth that only makes sense if you understand that the globalist goal is to deliberately conjure a geopolitical catastrophe. The IMF also asserts that blockchain technology will make capital transfer easier and more efficient in this future environment, which explains the enthusiastic globalist support for developments in blockchain technology and cryptocurrencies despite the notion in cryptocurrency circles that blockchain would somehow make the bankers obsolete. The IMF also acknowledges that in the meantime a slowdown in capital flows has occurred, and that this slowdown is ongoing since the crash of 2008. What they do not explicitly admit is that the crash of 2008 never ended, and that the decline we are witnessing today is merely an extension of the depression that started 10 years ago. Certain facts have become obvious to anyone with any sense over the past year. First, as the Federal Reserve began tightening stimulus policies by raising interest rates and cutting assets from their balance sheet, the global economy began to return to steep declines not seen since the credit crisis. I predicted this outcome in my article Party While You Can, Central Bank Ready to Pop the Everything Bubble, published in January of 2018. The plunge has started in almost every sector of the economy, from housing, to autos to credit markets to retail. Now, even jobs, numbers which are highly manipulated to the upside, are beginning to falter. The assertion in the mainstream media is that this recessionary downturn is new. This is not the case. What began in 2008 was an epic implosion of multiple national economies, and what we are seeing in 2019 is the final culmination of that process, the end game. It is not a coincidence that the downturn started right after the Fed began tightening stimulus measures in 2017. With only a minor increase in interest rates and moderate cuts to their balance sheet, all the conditions the economy suffered in 2008 are suddenly returning. What this tells us is that the U.S. economy and parts of the global economy cannot survive without constant and ever-expanding central bank stimulus. The moment the stimulus goes away, the crash returns. Does this mean that central banks will try to keep going forever? No, it does not. So far, the Fed has not capitulated at all from the path of tightening. In fact, the Fed nearly doubled its normal balance sheet cuts from January 30 to the end of February, dumping over $65 billion in a 30-day period. The Fed also has not changed its dot plot projections for 2 more interest rate hikes this year. This means all the talk the past 2 months of the Fed going dovish was nonsense. Setting aside their rhetoric and looking at their actions, the Fed has been as hawkish as ever. The only people who might find this to be news are most stock market day traders, who ignore all other failing indicators and seem content to base their economic projections on equities alone. Set aside the fact that stocks plunge in December into near bear market territory. The bounce in January and February has convinced them that the Fed is stepping in and will not allow the economy to tank. But the plunge protection team is about to pull the rug out from under their feet after training them like Pavlovian dogs to salivate at the sound of the word accommodation. Their mindset is based on a host of incorrect assumptions. To be clear, while the Fed paid lip service to accommodation in their public statements, it was not the central bank that stepped in monetarily to stall falling stocks. That was actually the Chinese central bank, pumping billions in stimulus into global markets at just the right moment. Chinese stimulus coupled with pension fund buying at the start of this year saved stocks from losses beyond 20%, but markets have met resistance on the way up. Without renewed stimulus measures from the Fed, equities have topped out multiple times and refused to move towards their previous highs. This suggests that the 2-month bounce is over, and that stocks will now fall back down to December lows and beyond. If the projections I made in January are correct, then the Dow will fall into the 17,000 to 18,000 point range from the end of March through April. The facade is slowly but surely melting away, not just in economics, but everywhere. I predicted both the success of the Brexit vote as well as Trump's win in 2016 based on the theory that the globalists would allow or even help populists to gain a political foothold, only to crash the economic system on their heads and then blame them for the disaster. So far my theory is proving correct. Trump's trade war continues unabated despite claims by many that it would be over quickly. Currently, there are no plans for a March summit between Trump and Xi, and the possibility of a summit anytime soon has come into question as Trump's negotiations with North Korea fell to shambles last month. The negotiations are a farce and are not meant to succeed. I continue to hold to my position that the trade war is a planned distraction and that Trump is playing a role in a globalist scripted drama. The facade of Donald Trump as a populist candidate is quickly ending. His cabinet is loaded with think tank ghouls and banking elites, so this should come as little surprise. But there are still some analysts out there that naively believe that Trump is playing 4D chess and that he is not the Pied Piper he now appears to be. What I see is a president that claimed during his campaign that he would drain the swamp of elites, then stacked his cabinet with some of the worst elites in Washington, D.C. What I see is a president who argued against Fed stimulus measures and the fake stock market during his campaign, and who now has attached himself to the stock market so completely that any crash will now be blamed on him no matter the facts. What I see is a willing scapegoat, a president that is going to fail on purpose. In terms of the Brexit, I still predict that there will be a no-deal event, and that this is by design. The Brexit deal with the EU is slated to be decided in the next few weeks. A no-deal outcome would be a perfect excuse for a major financial crisis in Europe, which is why I think it will happen. While sovereignty movements in the US will get the blame for the crash through Trump, sovereignty movements in the UK will get the blame for a crash in Europe through Brexit. It is important to remind the public that this narrative is entirely false. The economy has been in a state of animated death since 2008. Central bank stimulus acted as a kind of fiscal formaldehyde, keeping the visible signs of a crash at bay for 10 years but also creating a bubble even larger and more destructive than the one before. The everything bubble has now been primed to explode with maximum damage in mind. The Fed started the tightening process for a reason. The establishment is ready to start the global economic reset, and they have their populist scapegoats in place. The crash in fundamentals returned in mid-2018, and I believe that crash will finally be acknowledged publicly by the media in mid-2019. The point of it all is described in the very IMF interviews and documents I linked to above, total centralization of the global economic framework, managed by the IMF. They describe it as multilateralism or a multipolar world order. This is meant to fool us into believing that the reset is about decentralization. It isn't. The crash itself is simply a means to an end. It is a tool to gain fiscal and psychological leverage against the public, that is all. The crash itself is simply a means to an end. It is a tool to gain fiscal and psychological leverage against the public. The everything bubble was created for a reason. The Fed has tightened into economic weakness over the past year for a reason. The timing of Trump's trade war and summit failures have happened for a reason. The timing of the Brexit chaos is happening now for a reason. The globalists are pulling the plug on economic life support today, the crash is engineered, and sovereignty movements are supposed to take the blame. The best option at this time is to continuously force the issue of central bank culpability. Liberty activists have to keep the focus on them and their criminal participation in economic sabotage, and we cannot assume that any government or political leader will be friendly to our cause. The globalists have started the crisis, and we must finish it by making sure they are held accountable.